Hey everybody, and welcome to another trading education video. I've got a quick one for you today on how to identify swings in the chart and how to use the Fibonacci retracement tool on those swings. A lot of you see me use this weekly in my videos on YouTube, and you've been asking about which swings the Fibonacci tool gets placed on. So I'm going to give you a quick demo on how to use the tool, how to identify those swings, so you can put it on your own charts at home. Let's go. Here we are in TradingView, and I have a blank Solana chart pulled up just as a sample, and the Fibonacci retracement tool is the third tool down on the tool column on the left side here, and you just draw it like this, and you'll notice on mine I have the 100%, the 50%, and the 0 as the main values. I also have the 618 and the 382 turned on, but I have the transparency turned down on that. So I've done a custom setup on this. A lot of you might be saying, hey, your 618 and your 382 are flipped. Well, a lot of folks like to draw the Fibonacci retracement tool like this. I would put the 618 at the bottom, the 382 here, but the values fall at the exact same place, so it's a bit of preference. And also, I just like having the 100% at the top and the 0 at the bottom. It makes sense to me. And I've colored these because the green is the strong half, the red is the weak half. So this is how I like to draw it, but you can draw it top to bottom to top, whatever floats your boat. To dial in these settings, you double click on the tool here, and here are all your values. By default, the 50% is not turned on. So that's something that I have turned on for myself because the 50% is a very important value and where price action most often retraces to. And then also by default, normally the 786 is turned on and the 236 level right here, but I've turned those off just to clean up my tool a little bit, and I found that price doesn't retrace to those levels quite as often as it does the 50%. And then the second would be the 382 and the 618, and then these would be the third most common levels. So if you want to have these on your chart as well, we can just hit OK so you can see what that looks like, and that gives you all of the Fibonacci values there. Now, before we start mapping out our Fibonacci retracement tool on the chart, we have to identify where it is supposed to go. And this tool is meant to go on major swings. And what I mean by a swing is if we break down all this chop in the chart into very simple segments, we have a low here, a high. So we would have a swing from high to low, that's one swing. Then low to high, that's another swing. High to low, that's another swing. And then low to high right here, that's another swing. And then high to low, that's another swing. And now you could say low to high for another swing, but we need to see how this plays out. If, for instance, we continue higher in the price action, then we have to adjust the tool to wherever this price tops out at. Or if Solana corrects from here, then we would consider this chop here all part of one bigger swing down. So the current price action is a bit of a moving target. And if we sharpen that up right now, I'll just take the Fibonacci retracement tool and I'll take it from the high here in January and I'll draw it to the low here on April 7th. And that gives us our primary values. Let me just tighten this up a little bit at the top there. And you can see that our 50% value, which is the most important part of the zone, falls right here at $195. If we move the tool back in time a little bit, we can see how that level was a point where price action really floated around a lot. And now as we move up, hopefully, in price for Solana, this is going to be the biggest hurdle for us to get into this larger 50% level from the all-time high. But then we can also draw this tool on our current swing from April 7th up to our top here in May. And there is our range. And you can see how the 50% played really nicely with that price action. And then the 618 gave us some resistance. It's provided some support right here. We wick down below it on one candle, but provide support. And also here, the 618 provides support and a bit of resistance. We're actually just underneath that right now. So I know we have a lot of layers going on here, but we can get into even the next swing to see where support and resistance would be in this area here. And you can see how that 50% for this swing down falls right here at $157, which is right where we've been getting a fair bit of resistance overhead. Now, I know this chart is getting a bit messy with all these lines, so you probably don't want to have all of these on at the same time. But I use this to figure out key levels. And then often what I like to do to keep my chart cleaner, if we zoom out, is I'll just take the line tool, the second one down here, and I'll draw a horizontal line right here, for instance, at that 195 50% level. I know that's an important one. And then I know that this 50% right here at 141 is also an important one. So I'll draw that in, and then I can just delete these from the background, and I can clean up my chart a little bit to just focus on the important price action that we're focusing on right now. And this is one way of drawing support and resistance levels. And then we can also obviously go off of previous price action. So just looking at areas where we found a lot of support and resistance. So I would say actually at the bottom of this range here, where these candles close, and we wick down right here, this would be another support area. And it's important to give yourself some tolerance with these levels. Don't think of it as a number exactly to the cent. As you can see, these wicks go through. If it's a big news event, you can wick down a little bit more. This was Iran-Israel right here. So think of it more as a range. So the Fibonacci retracement tool is one way that we determine support and resistance levels. Simply looking at the price action and the swings in areas where we've had a lot of tops and bottoms is another way. So we could say like right here, two tops, what does that line up with? Well, we have another top there. That corresponds to these bottoms. So 179, 180 could be an area to watch out for, and we actually know we found a lot of resistance there, and our 200-day moving average was just above 180 right there. So that's using price action, and then you can also use the VRVP and these high volume areas to determine support and resistance areas as well. The Fibonacci retracement tool is just one tool in your overall toolkit to determine support and resistance zones. And let's just sharpen this up with our current price action, which actually, look, we came right up here to the 618 on this wick when the Solana ETF launched. And if we draw in our levels here, now this is just for this very last swing from the bottom to the top right there. That's what we're looking at. And right now we are finding support at that 50%, which is coming in at 145 for this range. Our candle right now is dropping. Let's see if we can find support at the 618 of this range at 149.60, let's say just 150 for round numbers. And we'll have to see what the price action can do, because we have a bit of consolidation here with overlapping candles. All right, so I hope that's helpful just to get you started on applying the Fibonacci tool appropriately on your own charts. It's a very helpful tool and can be applied to any time frame. Just know that the larger time frame moves obviously hold more weight than, say, if you're on the 5-minute chart drawing the Fibonacci tool on a small swing for a perp trade. I'll see you guys in the next video. Bye for now. This isn't financial advice. Past results are not indicative of future performance. Do your own research.